In this video, traders, we are going to look at the real reason you lose when you increase trading size. It's not what you think. Stay tuned. Hey guys, warm welcome to you. All right, so the challenge for us as traders is something's working well. We want to increase our trading size, right? We know that we are kind of trading here at whatever size we're trading, and we want to get to trading whatever size we want to ultimately trade, depending on our account size, etc. And we know that's a journey we've got to take in several steps. We can't go from trading 100 shares to trading 10,000 shares on the same instrument in one hit. If we trade spread betting, we're going to go from £1 a point to £100 a point in one hit. The psychology impact is too great, and I've done a kind of video exclusively on the psychology of improving or increasing, should I say, your trading size, but this is slightly different. So the real reason you lose when you increase trading size, and this is kind of a bit of a hypothesis, and let me know if you agree with this. There is that one thing of, okay, when I increase my trading size, there's more pressure, and so you start to take trading decisions from a different part of the brain. And again, this is something I've talked about a lot. We know that, when we are under pressure or some things are different, we're using stuff, the blood's going to a different part of the brain, the back or the front, can't remember the way around, but the idea is, when there's different stress on us, then different parts of the brain make the decisions, and so we start making bad decisions for our trading. All right, so there's that, but there's something else that I kind of want to put out there and hear what your comments and thoughts and suggestions are on this. If you imagine, right, we've got market conditions A, okay, and your trading is working well. You imagine you're kind of plodding along here, this is time. You're going along, you've been trading at this level, whatever that level may be, plodding along quite happily, and you think, you know what, I want to kind of increase my trading size. I don't want to jump heavily, but I'm going to add a little bit more size on, because ultimately if I can trade more size, I can make more money, my bottom line is going to increase. Double thumbs up. Now you start at this point here to decide to increase your trading size, and because most of the time, we are told, and we want to do it as well, that we don't increase our trading size until we've proven that we've had a good run. Most people start to increase their trading size after a good run. It's generally considered to be good practice. There's your good run, doing very nicely. Account equity curve is up. Now let's increase my trading size and let's move on. However, what tends to happen is this. We know the market goes from one type of phase to the other. And so we look now into the next phase of phase B, where conditions are slightly different. They're slightly different. And the strategy that you will be using under condition A or conditions A isn't quite as effective. It might even turn into a losing strategy. Now, if you were trading the normal size and you were going into B, if you've had this situation before, which you've been trading for a few years, you probably have, you'll say, okay, I need to cut it now, I need to come in and reassess, and there's a little normal window of time where for most of us, depending on, some people kind of trade and end up getting hammered because they're trying to force something that's not, but most of the time, there's a little window where you're trying to gauge what's going on with the conditions, and you come back in and you're trading again very nicely there. Now, if you've increased your trading size at this point, what you end up doing is you're putting so much weight on the fact that you've increased that trading size there, and you're then saying, well, I'm getting hit, because you would have been hit anyway, because the timing of you increasing your trading size is in that period here where conditions are changing. So you've done all the things you think you should be doing. You've waited until you've had a good run, and then you're increasing your trading size. So you increase your trading size, you get hit, it hurts you, you go back to where you were, you end up doing some damage to your account equity because you're losing in a more larger size than you would be before, and it ends up being a disaster, and you start again and you build up again, and you go through this whole loop, and you're consistently going through this whole loop. I'm here to say and to hypothesize, and again, let me know your thoughts in the comment section below. This will resonate with a few of you out there, that when you're increasing your trading size, there's a good possibility that the market conditions have outrun their stability, if you like. Now, of course, there are times when the market conditions will stay the same for a very long period of time, and that's when we get these nice runs. We increase the trading size, increase the trading size, increase the trading size, account balance nicely boosted, and hopefully we're in a position to put the brakes on when the conditions change. But a lot of the times conditions are changing back and forth, and so we increase trading size just as conditions are changing, because we've held on until we've had a nice run. So what's the solution with this? Well, the solution is is to prove that you can trade through multiple conditions, prove that you can recognize the changing conditions and you've got a sound strategy for avoiding this dead spot when you're switching conditions. Have some way of doing that. And again, many traders, myself included in this, won't trade under certain conditions. They just know I'm not that good under certain conditions, and traders, hey, there's no point in trading and putting all that effort into it and making a little bit or even losing when I can just put all my effort into what I know I'm good at. So it's identifying when the conditions change and pulling the brakes. Then when you've got a good way of dealing with the changing conditions, whether that is not getting involved or whether that is getting involved with a different strategy, then you can start to dial up the size, because you're aware that when things like this happen, it's nothing to do with the size, it's to do with just the general ebbs and flows of the market changes and conditions. So something to think about, guys. Most people put it down to the psychology of increasing size, and there's definitely something to do with that. As we increase trading size, we're increasing the pressure, but there's also something to be said for very often we're increasing size after that run, and that ultimately is when conditions might change. So that's something to think about with your trading. Have you gone through that before when you've increased trading size and it's not worked for you? Was it because conditions changed? Was it because the strategy wasn't quite working? Or was it because you changed the way you traded your strategy? If you can identify that, you can start to increase the trading size a little bit more successfully, hopefully. All right, guys, take care. Keep your risk managed, whatever you do. Bye-bye.